Let's cross to Chris Conway for you now. He's standing by in our Melbourne studio to the minute. Chris, welcome into the program. Your thoughts on levels on this market today in terms of where we're hovering between the 5,200, 5,300 level?
Good morning, Carson. Yeah, hovering in the 5,200 to 5,300 range for the best part of the last week. I was expecting a little bit more further downside today, but it appears that the offer for Santos is holding up the energy sector and more broadly the rest of the market. But I still expect further weakness for the market. I'm still a bear. And the big question that I have in my mind at the moment is sort of, where is growth going to come from?
Well, and your conclusion, because questions are taking you so far, answers are, of course, needed. What do you determine is the answer?
In terms of the growth question?
Exactly.
Yeah, well, the thing is I can't find an answer. The more and more I look at the data and the more I look at forward expectations, perhaps the more and more bearish I become. China's GDP number the other week, 6.9%. China's slowing, there's no doubt about it. The only question seems to be by how much. We've had GDP global growth forecast downgraded from the IMF, World Bank, the Fed's done it, locally the RBA's done it. We're in the midst of a US reporting season, which is going to be pretty disappointing. Earnings down 5.5%, the second quarter of negative earnings growth. Everywhere I look, there seems to be bearish stories. The only positives that I can find, Carson, and these aren't ones to hang a further rally on, is that locally some bargain hunters have moved in and bought value because the forward PE's come back to its probably 10-year average.
Concerning as well, yeah. Health was meant to be the great defensive, was it not? Health, we're all aging, we're told. We're all going to be needing the geriatric care sometime soon, and so it goes and so it goes. Then you look at somebody like George Savvides and Medibank Private, the float of 2014, you could argue. He leaves, he exits, gives up his bonus shares just a year after their float. That seems awfully hasty. What does that speak to?
Well, I think that's fairly telling. I mean, Medibank Private, obviously it's an individual story, but generally when private equity or a government sells an asset, it's usually at the top of the cycle and they're going to get the best price for it, hence why they sell it. Him walking away from that, again suggests that he doesn't see too much further upside in it. That's the only conclusion that I can draw. So longer term, there is, as you said, the expectation as we all grow older, we all want better healthcare. And, as the middle class in China grows and things like that, they'll want access to better healthcare services. But, that's a 10-year story. That's a 20-year story. Not a story that's going to dig the market out of, its 5,300 rut right now, I don't think.
OK, Wesfarmers comes in ahead of expectations on food and liquor. The stock's barely, though, budging on this release. So we're talking about about a 0.2% rise. Pretty pathetic.
Yeah, look, the numbers this morning were great. The numbers were a little bit surprising given the ongoing threat from Aldi. I think it's a credit to the Wesfarmers management that they've been able to cobble together the numbers that they have. You're right, I'm a bit surprised by the lack of a boost in the share price. Probably because the numbers aren't strong enough to get upgrades from analysts. But again, looking forward, I think the biggest story is that ongoing threat from Aldi. Aldi's already got 11% of market share on the east coast of Australia. They're about to pump $750 million into expanding into South Australia and Western Australia with another 20 stores in each state. So that competition is still coming, and it's going to come thick and fast. And then, of course, Lidl's about to drop in Australia as well. So it's that ongoing competition story that I think is leaving investors a little bit hesitant.
And to that end, Woolworths, which is, aiming to go ever more head-to-head, albeit without a head honch, if you like, in the form of its chief executive. But here we have a rewards program with Qantas binned, ripped up. No more. I mean, how to explain this? How to understand a fundamental agreement that's no more? And why would you shop if you can't get the points?
Yeah, look, it is a strange one. Then again, just this is me personally, I don't really care too much for the rewards programs. You've got to spend about $1 billion a year to get a flight to Toowoomba. Right. So I don't know that there's too much value in it. But yeah, look, it is. Again, I mean, the reason why they're doing it is they want to cut costs. It just goes to show you the difference between Wesfarmers at the moment and Woolworths. Woolworths is breaking a relationship with an iconic Australian brand to save money. It's probably going to disappoint a few of their customers. They've got the Lowe's put option hanging over their head. Meanwhile, Wesfarmers is dropping numbers this morning that are, knocking one out of the park, so to speak.
Will Lowe's bail incidentally? Will Lowe's get out? What's your sixth sense?
Honestly, I think it's a 50-50 bet.
Well, you've got to take a position. Come on. 50-50 is neither here nor there.
Look, if I was Lowe's, I'd get out.
Okay.
Yeah, if I was Lowe's, I would get out, and then it will follow suit.
All right, and then cue all the litigation that will flow, right, over valuations. They say one thing, we say another.
Yep, and then it'll be an ongoing process, and the only people that will win will be the lawyers.
Yeah,
everyone hates the lawyers. Yeah, look, I mean, I think if Lowe's does exercise that option, Woolworths is gone. Woolworths is out of that market. They hand $1 billion of revenue to their direct competitor in Wesfarmers. Wesfarmers gets another leg up. Bunnings keeps, outperforming for them. And again, it increases the divide between Wesfarmers and Woolies. Now, the only caveat to that is in selling out of Masters, Woolworths will get a bump in the share price because everyone on the register wants this thing gone.
Okay. Cheap. It'll be gone. Thank you so much. Talk to you, Chris Conway from the Australian Stock Report.